So coming to the point, I wanted to start some extra topics with you, and these extra topics are basically I have taken from CA final textbook just to discuss in case if a question comes on it. Okay, so you can expect a question to come on dividend direct. They will give you some case study and they can ask you a question on dividend. So the one question I can do on dividend with you, like it will take me a long time to explain you all this. Then there is one more audit which I want to cover is cost audit, and the third area which I want to cover today is internal audit. Now you would say, sir, internal audit is not new for us, we have already covered this internal audit. But even though you have covered internal audit, there are certain new points which I want to discuss, and I will make you delete the old points. If you remember in CARO, I had taught you CARO, and a good news for you is that CARO is not applicable for the May 15 attempt. Okay, so May 15 attempt, CARO won't come. The sheet which you have got just now, the question papers, I have written there on top, CARO is not applicable for the May 15 attempt. So you may not study CARO because it's not applicable. Okay, but it's okay, you should have knowledge of CARO. The ICA has recently made the announcement just 2-3 days back that they won't be asking questions on CARO. Okay, so it's okay, at least you don't have to study that topic. Okay, can I proceed now? Pay attention. Now when it comes to dividends, I want to discuss few things with you. So you please give a small topic called as dividend. Okay, in fact now I want you that you should concentrate on these areas as they may come in exam for 10 marks. CARO won't be coming, so I am announcing it, so you please don't study CARO and go. Okay, so you please write down the heading, dividend, cost audit and internal audit. Dividends, cost audit and internal audit. Okay, let's start. It's only the title, you can write it as long as I'm writing it here, so you can copy. First thing is on dividend. Now everybody should concentrate for some time. It is useful for you. See, when I talk about dividend, we can take two views here for dividends. One view can be taken from company's point of view, which pays dividends. That means dividends can be interpreted in two views, company's view and the investor's view. Okay, there is no fixed definition for dividend given even in the Companies Act. So now since we are supposed to define what is dividend, dividend is very easy to define. From an investor's point of view, dividend means return on investment from investor's point of view. Okay. Whereas, so when an investor has made some investments in the company, what he anticipates from the company, he anticipates return on investment. Then let's talk about company's point of view. From company's view also, dividend is nothing. Since it is income or return for the investor, from the company's point of view, it is considered as COC, cost of capital. Okay, so company treats dividends as what? Cost of capital. Now, when we are interpreting this word dividend from company and investors' point of view, there is no literal definition given in the Companies Act. Even in the new Companies Act, the definition, if they give also for dividend, it is a very, very absurd or weird definition to define. So keeping that aspect in mind, if they ask you a question on dividend, you must first define what is dividend. So dividend from investors' point of view is nothing, but it is a return on investment, whereas from company's point of view, it is considered as the cost of capital. Let me tell you that when we are talking about dividend, though dividend actually has no types, but if I read some accounting standards, like if I read accounting standard 9, these standards, they pinpoint us to recollect some types for dividends, though actually there are no types for dividends. When you do audits, you come to know that companies just pay only one form of dividend, which is called as final dividend. But then if I start reading accounting standard 9, it may not correlate with what the law has to say. The law says that actually dividend means only a final dividend which the company gives to its shareholders. That law says. But accounting standard, when you read AS9, they will give you when should the revenue be recognized for interim dividend, and I have told you this point in past also. When should the revenue be recognized in case of final dividend? So writing here interim dividend and final dividend is only because the accounting standard makes such type of classification. Otherwise, practically if you go to see, there is no hard and fast classification in law. So if I have to tell you what is the meaning of this term dividend and how many types of dividends are there, generally dividends can be interim, generally dividends can be final. The only difference is that if I pay dividend to the shareholder at the annual general meeting, okay, if I pay dividend to the shareholder at the annual general meeting, then it is considered as a final dividend. Whereas if I pay dividends to the shareholder between two annual general meetings, okay, AGM 1, AGM 2, in between this person is getting what? Dividend, then it is considered as what? Interim dividend. That's the only difference. Now I will give you two examples to tell you when this can happen. Okay, so now suppose the company wanted to pay dividend to the shareholder earlier than the AGM. It is possible that the company can pay final dividend to the shareholder earlier than the AGM, because now from now onwards the rule is that, see, earlier in old Companies Act 1956 what used to happen, whenever companies used to pay dividends to the shareholders, they had to transfer certain percentage of profits. First you have to transfer certain percentage of profits to reserves and surplus, and this percentage what I have written here, there were rules to transfer. Those rules were called as transfer of profits to reserves rules 1976. Okay, that were the old rules in old Companies Act. So these rules were asking the company to transfer certain percentage of profits to reserves and surplus before giving away any profits as dividends. Now that is not the case. Now if I read the 2013 Act, what does 2013 Act says? That it is the discretion of the company to make any percentage transfer, to make any percentage. There is no fixed rule now. So the good part is that these rules were very difficult to understand. When I used to explain it, it was very difficult for a student to understand. Okay, so then it was very easy for the company to just see the rule, follow the rate and transfer it, but difficult to understand the rule. But luckier part now is that these rules have been repealed. Repealed means they are taken back. So now we are not going to follow these rules. As per 2013, what we can do, we can make any percentage transfer to the reserves and surplus, and that is at the discretion of the company. So when the company knows already that it has made good profits, what it does, it automatically gives dividends even without the shareholder coming and attending the annual general meeting. Even without the shareholder coming and attending the annual general meeting, the company will give away profits as dividends. Okay, so basically interim dividend and final dividend, the biggest difference is that AGM to AGM, so between two AGM, if I pay dividend, it is considered as interim. Okay, I told you I am giving you two examples. Number one example is that even final dividend can be paid before the next AGM is going to take place. Are you understanding or not? Because an AGM to take place, what is the time limit? Come on, you tell me. After 31st March, AGM can take place anytime for this 6 months period. In between 6 months, anytime AGM can take place. So suppose AGM was scheduled on 30th of September. But the company paid dividend once the accounts got finalized, audited, everything was done. Company paid dividend on 31st July only. So this type of dividend will be technically called as what? Interim dividend. Though it is not an interim dividend, it is a final dividend only. So when we look at the definition of interim dividend means what? Any dividend which is paid between two AGM in the intermediate period is called as interim dividend. However, final dividend, you can now technically call something as final dividend when it is paid at the AGM. Okay, that is one example I wanted to give. The second example could be whenever company anticipates that in the next half year to come or in the next quarter to come, the company anticipates that it is going to have super profits. Now the whole year is not yet completed. The year is going on. 6 months are over, 6 months are yet to be going on. Okay. So now the company anticipates, anticipate means what? In future there is something going to come, and that is nothing but super profits. Company, see, there is no definition for super profits also. Now if you want to define super profits, you can say that this is the level of normal profit which I am going to earn. Anything which I earn beyond the normal profit will be called as super profit. That is how we define super profits. Okay. Otherwise there is no definition. But when we are, since we are account students, in accountancy it is written that anything beyond normal profit is supposed to be a super profit. So company, when it anticipates super profits to happen, what it does, it gives away some profits as interim dividend. Okay, so interim dividend, I gave you two examples. What was the first example? Interim dividend is nothing but it is the final dividend given before the declaration of dividend at the AGM in this period somewhere, as I told you. And second example for interim dividend was that it is nothing but it is a dividend which is given out of the super profits which are anticipated by the company. Since I am using the word anticipated, what I mean is that, see, whenever we anticipate something, it clearly means that that thing is yet to happen. That means the profit and loss account which I look on the basis of which I am giving the super profit, it is possible that the profit and loss account may be unaudited profit and loss account. Now here this word is very important. Examiner wants you to write this point. Whenever generally companies give interim dividend, it is given out of unaudited profit and loss account. That means the profit and loss account is not audited by an auditor. However, you cannot give final dividend if you are giving final dividend at the AGM. Now we all know that when the shareholder will come in the AGM, that shareholder will always get the audited annual report also along with him. He will ask queries to the board of directors. So that time when we are talking about final dividend is always given out of audited profit and loss account only. You can never give final dividend out of unaudited profit and loss account. So what clarity I am trying to give you here is that when we are talking about interim dividend, it is possible that interim dividend may be given out of the super profits which are anticipated by the company. Whereas when I am talking about final dividend is given out of the normal profits only, and these normal profits are absolutely audited by an auditor. Okay, so final dividend is out of audited P&L, interim dividend is out of the unaudited P&L generally. But suppose if it is final dividend in the nature of interim dividend, something like this example, okay, then it has to be audited profit and loss account only. So now after having told you this meaning, see this meaning takes a lot of time to understand. Now things are simple. You tell me what I spoke about interim dividend. What is interim dividend? Come on, tell me. Yes, any dividend which is given between is called as interim dividend. And what about final dividend? At the AGM is called as final dividend. Tell me, for interim dividend generally out of which profits we give? Super profit. That means the company anticipates more profits. Okay, here it is given out of normal profits. Okay, tell me what about the audit factor? This is unaudited profit and loss account, and this must be audited. Okay, must, you have to do the audit, and only then you can give the dividend out of it. So this must be audited profit and loss account. Now what I want to tell you here is that though we are giving interim dividend and final dividend, there is one more thing which I want to clarify here, and that is called as depreciation issue. This is one issue which the New Companies Act has also focused upon. So let us just see, and I expect a case study to come from here. In IPCC they can ask a question from this point, depreciation. Now when we are talking about depreciation, what it actually means, depreciation, we all know that when we use fixed asset, they deteriorate in terms of their usability. That is why we have to write off certain cost of fixed asset every year. Okay, and as we all know that in company law we can follow any of these two methods, though in income tax that is not allowed, but in Companies Act we can follow either straight line method or WDV method. Now what does Companies Act says? That whenever company gives away any profits as dividends, of course dividends are the cost for the company, that I told you in the beginning only. and now the company wants to spend this money on its investor. Company will spend this money on an investor. You see the connectivity, and this connectivity books will not explain you, so you have to pay attention. Company wants to give cost to the investor. Investor, it is income. For company, it's a cost. Now when company is giving some money to the investor, of course it would have used its assets to generate that money. Okay, now assets are used on one hand. So if I'm using my fixed assets on one hand, fixed asset leads to productivity, productivity leads to sales, sales lead to profit, and profit leads to dividend. So linking that productivity and fixed asset point, you tell me to earn that profit I had to use the fixed asset. So now I had to depreciate that fixed asset. Okay, I must depreciate that fixed asset. Without charging depreciation, I cannot give away profit as dividend. That is what is the intention of company law. It means what? Now onwards, it is must for everyone to charge depreciation before giving away any profits as dividends. Have you understood or not? You must write this statement. So if the examiner is asking you that the accountant of the company did not make provision for depreciation but the profits were distributed as dividend, it is violation of the Companies Act, because Companies Act says whichever method you follow, that is not the lookout, that is lookout of Accounting Standard 6. Okay, when Companies Act is discussed, that time you have to read the provision properly, which says that it is must for you to provide for depreciation before giving away any profits as dividend. And I told you what is the connectivity. I use my fixed asset only on the basis of which I can generate some profit. If the fixed assets are not used, I cannot generate profits. Okay, so in that case I have to give away those profits as what? Dividends. Okay. One more thing which I want to say about dividends is that when we are talking about dividends, remember, in the old Companies Act and in the new Companies Act, there is a variation on the depreciation point. The old company law used to say that it is possible that central government may exempt certain companies. Certain companies means they are basically public companies only, because whenever government is involved in a transaction, it is only to be involved only when it's a public company. Okay, public company is a company which can accept deposits from people. Public company is a company which is having no restriction, just like private companies have. Okay, its articles of association do not restrict the company as a private company's articles does. So government has exempted certain class of companies. Okay, certain class of companies. So in 1956 Act, what used to happen? Some class of companies government used to exempt, and those companies never used to give away any profits as dividends. That means what? If they give also, they never used to make provision for depreciation. What I mean to say here is that I am talking about one more point about depreciation. Just now I made a statement that whenever you are giving away any profits as dividend, it is must to provide for depreciation. But when we used to read the 1956 Act, it contained a point under section 205 which clearly said that government may exempt certain class of companies to provide for depreciation before giving away any profits as dividend. Now, you know why government used to exempt such companies? It is possible that this company was a new company which is just come into the market. The profits which were earned by these companies were marginal in nature. We all know, and in fact in Caro also I have taught you one clause, if you remember, that in a company's incorporation stage and the registration stage, in the first 5 years of registration, companies generally make no profits. Okay, 3 to 5 years they are loss making only. It is a general business scenario. So government used to understand this point, and it used to give exemption to certain new companies. Okay, so certain new company, because see, if you make provision for depreciation, it will even affect your profits more. So when you overall go to see, then the profits will be very less, and there was nothing left to give dividends to the shareholders. As we all know that when we make provision for depreciation, the profit gets reduced, and first of all, this company is a new company which is hardly earning some profit, and that also gets reduced by providing for depreciation. So this was a very stringent provision that it is must to charge depreciation. So what central government used to do, it used to exempt certain class of companies from providing depreciation. Now central government says nothing like that. Okay, now in 2013 central government believes that only those type of companies should sustain in market which are efficient in nature. Okay, And I used to keep on telling to the student, time will come, the law will change and they will introduce this point, because today market does not works on, nobody is going to see how much time I should give you, how much gestation period I should give you to develop. You should be efficient right from the beginning. One more reason for deleting Caro is because of Caro gives more chances to the companies. Okay, even if the companies are not that efficient, auditor writes something in Caro, but still no action is taken. Now central government has become little stringent on this point. Now central government says that now it all works on efficiency, and every company, no exemption will be given now. Now I am clearly writing here, no exemption will be given. Under 2013 Act, when I wrote this word must, depreciation is must to charge provide for depreciation before giving away dividend. Now it applies to all companies. So now central government will not give any exemption. Okay, not give any exemption. Exemption means what exemption it used to give? It used to exempt those companies for charging depreciation or providing for the same. Okay, but now no companies will be exempted, all companies will be charging depreciation. That means now it has become must for everyone to provide for depreciation before giving away any profits as dividend. So this is a difference between the 1956 Act and the 2013 Act. I hope you have understood this point. Now one more thing, which though I have not even spoken about much about dividend, there are some more aspects also. So one case study expected from this point, that it is necessary to provide for depreciation. One more point which I want to tell you is a good point. There was one accountant of a company, what he did, the rate given under the Companies Act. See, you have already done AS6, Accounting Standard 6, and you all know that Accounting Standard 6 only gives methods for charging depreciation. Okay, WDV and straight line method. And don't follow CPT, because in CPT you would have learned 12 methods also for charging depreciation. None of them is applicable in the practical life scenario. In the practical life scenario, we only apply AS6, which only gives 2 methods. So that is why I always follow accounting standard. I don't follow some rough methodology. It's very simple. So now when you apply AS6 here, what is AS6 saying? That I give you 2 methods, but AS6 never gives rates for charging depreciation. When you read AS6, never it is written that furniture should be charged 10% depreciation, etc. No rates are given. That means what? That if you're an accountant, what one accountant did, he was an accountant of a company, and what he did, on a fixed asset, he charged depreciation when the rate was 10%. For the whole year, he charged depreciation only 5%. The auditor went for audit. He asked the question that when the rate is 10%, why are you charging 5%? You know what reason this person is giving? That, sir, first of all, this whole year I have not used the asset only. Not used the asset. He is saying that I have not used the asset, but still as a matter of providing depreciation, I have charged 5% depreciation. Okay. Now that is not an excuse. That is not an excuse, because if we read Accounting Standard 6, though it does not give rates for depreciation, it says one thing, that depreciation should be charged irrespective of whether you use the asset or not. Okay. If you are using the asset, anyways you are going to charge depreciation. But what if you are not using the asset? Still depreciation should be charged, because depreciation is a matter of efflux of time. You know what is efflux of time? Because of passage of time, assets become old, outdated and deteriorated. Okay, they diminish in terms of their value. So when we read AS6, it clearly says that depreciation should be charged, and now only thing is what AS6 is not saying is that at what rate it should be charged. Suppose accountant had a reason here that, sir, the whole year asset was not used, so why should I charge depreciation on it? Okay, so first he violated AS6, because AS6 clearly says that you have to charge depreciation whether you use the asset or you don't use the asset. Now if I read Companies Act, what does Companies Act says? Companies Act clearly says that when we are talking about depreciation, it is not necessary for an accountant to go below the minimum rate, because depreciation should be charged at the rate which is given in the Companies Act. Because this, suppose if the Companies Act gives 10% rate, this rate is called as the minimum rate of charging depreciation. It is minimum. I hope you understand what you mean by minimum. Minimum means what? I have to charge at least this much depreciation, though I may charge a higher depreciation also. Okay, see, if accountant charges instead of 10%, if he charges 20%, auditor should not tell him anything. But if he charges less than that rate, then you should tell him something, because Companies Act says that the rates which are given under the company law are the minimum rates of charging depreciation. There are at least 3 or 4 questions in the practice manual which are on this point, though they are as per the 1956 Act provision is given, but even the 2013 Act supports this point. Okay, so whenever you are asked a question that an accountant is charging depreciation which is below the prescribed minimum rate, what is your comment as an auditor? You should always write only one clear statement that the rates which are given in the Companies Act are the minimum rates of charging depreciation. So one cannot charge a lower depreciation than the prescribed minimum rate. However, a higher depreciation is allowed. Is it clear or not? That is what you have to mention. So this is one more point which I told you. So tell me what two things you learned from here. One, AS6 says that depreciation should be charged because of the efflux of time. So whether you use the asset, so that contention of accountant of not charging depreciation is not valid in law as well as in accounting standard. And what does company law says that when you charge depreciation, you should charge at least minimum depreciation. Do you know that if you see the depreciation chart in the Companies Act, there are 3 columns in it, and on top of the first column it is written single shift. Since I've seen it practically, I'm just discussing with you, though it may not be that much important for exam, but you should know for your article shift. Then there is one more chart, column which talks about double shift, and then there is a third chart which is on the triple shift reason. Now suppose if I'm having a plant and machinery, you know what you mean by single shift, double shift and triple shift. If you are in a day of 24 hours, if you are using the asset for 8 hours, up to 8 hours, you will be charging single shift depreciation, and the rate would be say 10%. However, if you are using the asset up to 16 hours, you will be charging double the depreciation rate. And however, if you are charging using the asset for the whole 24 hours period, there are some factories where the asset keeps on running throughout the day, it's on only, then you have to charge triple shift depreciation, which is 30%. I asked this to CA final students. They had said that, sir, in 2 years of articleship, nobody told us that this is also a chart, and accordingly, and they finished 2 years of articleship. And I know that an article has to always make, or he has to audit for the balance sheet. How can you audit company's balance sheet without knowing this point? So you must know this point. As a student, what you should know, that whenever we are charging depreciation, there are different methods for charging depreciation. That is one thing. And secondly, this is the shift factor. So the more you consume the asset, the more you use the asset, the amount of depreciation, the rate of depreciation increase. That is why I told you, from 10% you could have charged higher, but you cannot go below 10%. So that 5% was not okay, because 10% is the minimum rate of charging depreciation. Is it clear or not? Okay. One more thing which I want to clarify here about depreciation. You know that whenever companies used to give profits as dividends, what it used to do, a shareholder used to pass ordinary resolution in the annual general meeting. Okay, so that is still there. Like every shareholder, when he comes to the AGM, and when the shareholders are supposed to decide how much dividend they want, though I have already told you that whenever the shareholders are deciding for any rate of dividend, it is ultimately the BOD going to decide how much dividend it should be given to the shareholder. So whenever an ordinary resolution is passed in the annual general meeting, now when I am talking about annual general meeting, who will pass this ordinary resolution? Shareholder. Of course, decision making power lies with the board of directors. So if the shareholder says higher rate of dividend, then the BOD may not agree on this point. So this equation is invalid. If BOD gives you automatically higher rate of dividends, then that is acceptable. Then this is no argument. Shareholder will be happy, in fact, if he is getting more than what he anticipates for. So now when an ordinary resolution is passed in the meeting, do you know that once a resolution is passed, then the dividend amount needs to be credited in a separate escrow account. And this I have told you earlier also. Okay, while I was telling you something about Caro, I would have discussed this point. So dividend should be credited in the escrow account, that I have told you, and I have given you the time limit also, 5 days, 30 days, etc. My question is not on that. My question is on the new thing which has come recently in the Companies Act, which says that suppose if a dividend is credited in the escrow account means what? Tell me, escrow account means what? It's a special account designated only for dividend. You cannot pay any other expense out from this account except the dividend expense. Okay, so that is the escrow account. What do you mean by escrow account? You should remember this. Escrow account is a designated account. Okay, it is designated for some reason. Now, when the dividend is transferred in the escrow account, of course, the company has to open this escrow account with a scheduled commercial bank. Now, the shareholder has to approach to the bank, and then it has to ask the bank that, sir, please give me dividend. But how will the bank recognize the shareholder? Okay, yeah, so then there is something which I had told you, it is called as dividend warrant. You have to show the warrant. What do you mean by warrant? Warrant is an order which is given to the bank to pay dividend to the shareholder, whosoever produces the warrant. Now when the shareholder does not comes to the bank, do you know that this type of system is called as physical system of claiming dividends? It's all manual system. You used to walk and used to go to the bank. Now shareholders believe that instead of walking to the bank and taking the warrant copy, why not to give a letter to the company, and in the letter they will write the account number. We all know that once we have an account number, we give an account number to a particular person, direct money can be transferred in the account, okay, instead of wasting time and going to the bank all the way. And it is possible that the bank may be far also from your place. So now this Companies Act, in the old company law this point was not written. New company law, when you read in detail, it is clearly written that now a shareholder can give a letter to the company, and you just have to write a letter on the plain piece of paper. There is nothing like letterhead for a shareholder, okay, he is not the auditor. So letter to be given to the company, and he can give his account number details, and the dividend amount will be through electronic mode, will be straight away transferred into his account only. So then there is no need for the shareholder to take the copy of warrant and show it to the bank. Okay, so one more extra thing which I told you is that now you can claim dividends in the electronic format also. One more thing which I want to tell you about dividends, though you can claim dividends in the electronic format also, this only a fool can do. What he will do, he will not claim the dividend. It is possible that the person has not claimed a dividend. When the company is giving you so much facility of taking dividend in the electronic format, still there are people who don't claim dividends. Okay, so now if you don't claim dividend, come on, you tell me, it is called as what dividend? But can I say, even if the dividend is unclaimed, yet it is a debt for the company? Yes. It is a debt, it is an obligation for the company. That means if the shareholder does not comes to claim dividend in the prescribed time limit, can the company feel happy that okay, I saved my money, I don't have to pay dividend? No. What company has to do? Company has to transfer it into unclaimed dividend account. Okay, it is how you can straight away transfer in investor fund. First you have to transfer it in the unclaimed dividend account. And if the shareholder doesn't approaches in, then only you have to transfer this money in the investor education and protection fund account. Okay, as I had told you in the past also, this fund is a fund which is managed by the central government, and of course the central government takes help of SEBI. Okay, you must write this. So suppose if they ask you a question, what is the importance of investor education and protection fund? The money which is credited into this fund can be utilized to give information to the investors who ordinarily trade in capital markets. Many people are there in stock market who don't know even ABC of stock market, and they start putting their money because they have lots of money to trade in. Okay, but then they ultimately stand losing money. So instead of that, first to gain some information, and one medium which is available to gain the information is the Investor Education and Protection Fund. So Investor Education and Protection Fund is managed by central government in association with SEBI, and this dividend money, if it is not claimed by shareholder in 7 years time, it is credited into this account. My objective was not to tell you about this because this I have already told you. My objective is to tell you that now after the money is credited into Investor Education and Protection Fund, even after that the shareholder can claim the money from the investor fund. Okay, whereas if you read the 1956 Act, the change is that not claim. Once the money is credited in the Investor Education Protection Fund, shareholder cannot claim the money. But now he can claim the money even from the Investor Education and Protection Fund. Have you understood or not? This is all the points which you must keep in mind if you get a question on dividend. Okay, and one last point is, if I want to tell you, is that whenever we are talking about dividends, let me tell you that what AS9 says. AS9 says only one thing, that when it comes to interim dividend, revenue recognition should be done only when you have received the interim dividend. Okay, that means here in case of interim, AS9 follows the cash system of accounting. Though the drafting of AS9 is not on cash system, it is on accrual system. It's on accrual system. So if you talk about final dividend, tell me when you should revenue recognition of final dividend, when you should recognize the revenue. When it is declared at the AGM. So once the shareholder passes a resolution at the AGM, he is 100% sure that the company is going to give away profits as dividends. Okay, so then there is no question only of a dispute or of a waiving off of dividend. Is it clear or not? Shall we write on all these points? Yes. I already have ready-made points for you. You just have to read it once and then you can do the copying. You have to first listen, I will read, and then you do the copying job. Okay. Before I show you these points, in law, have you studied about public deposits? Okay, tell me one thing. What do you mean by public deposits? And what is the need for a company to accept public deposits? Any one person can also answer. Anyone? What is public deposit and why companies require public deposits? Yeah.
Sir, more number of small depositors can make the deposits in the company, and the company can also reduce the cost of capital.
Company can also reduce the. You mean to say that I don't give interest to the depositors?
Maybe lesser than what debentures should give.
Okay, you can say that. Okay, fair enough. So what he said is absolutely right. Please sit down. What he said is absolutely right. Public deposit is one way of, generating revenue or source for the company. And when you are accepting public deposit, it is not necessary that the rate of interest which you give to the depositor. And why? How can you accept deposits coming from? You can accept deposits coming from very ordinary people who are salaried people, who don't want to take a risk of investing in a share and losing the money. They would feel that this option is a convenient option from them. Okay, when you do the financial aspects of financial management, the financial management says that the structure of company is divided into two: equity and debt structure, as per financial management. Now in the debt structure, you already know that there are debentures. So that means what? Even public deposits are considered as one of the debt for the company. That means what happens, company is under an obligation to redeem these deposits, and these are for a small period only. They are considered as a current or short-term deposits for the company. Just like how you can keep money in a bank, you can always keep a money in a company also. But let me tell you that the rate of deposit which company offers to the investor will be higher than the bank rate, because if it is lower than the bank rate, why would the investor go to the company? He would keep the money in bank only then. Okay, so the very purpose of going for this deposit is that the rate is higher than the bank rate, but it may be lower than the debenture rate. Okay, so if bank rate is 9%, debenture rate is 10%, deposit rate will be 9.5%, something like that. Do you know that some companies, they don't pay deposits, they don't redeem also deposit. They take money, and I'm telling you, when I was teaching you Caro, this point is there in Caro, that deposits are considered as unsecured, and that we already know in financial management also. Deposits are unsecured loan. There is no security. We don't hire a debenture trustee for depositors. There is a debenture trustee for debenture holders, but there is no debenture trustee or no depositor trustee for depositors. So now they are not having any security. So what companies do, they take money from them, and since they are small investors, they try to take advantage of it. Okay, they don't redeem the money, or they don't pay the interest cost. Section 73 and 74 of the New Companies Act says that so long as you don't redeem the depositor's money, you cannot give dividends. Have you understood or not? This is a new point for you. What you have to remember here, just like I told you so many things about depreciation reason, one more point is there, that whenever company has accepted any deposits, and if it defaults in the repayment of deposit, then it cannot give away profits as dividend. You cannot make your existing obligations unhappy and then you can make happy to some other people. Okay, so here I see, because here I wrote a statement that this dividend is supposed to be the debt for the company, but it is debt for the company only after redeeming the deposits, not before that. So if the company has accepted the deposit, it cannot default in the repayment of deposits. If it does the default, that means it is not supposed to give away profits as dividends. Is it clear or not? Now you can start reading the points. So you can have a look at the points. First I will read, you just listen. A company, see, the language is very technical. I have explained to you very simply, but this is a bare act language. A company which fails to repay deposits accepted before the commencement of the act. That means it is not necessary that the deposit should have been accepted today only. It was accepted when the 1956 act was going on. But today the time has come for redemption of deposits, but company is not redeeming it. It is defaulting in the repayment of deposit. Before the commencement of the act, section 73 and 74, shall not. Shall not means what? It shall not give dividend. That is what it means, comma. So long as there is a failure, cannot give away, continues, declares any dividend on its equity shares. What does it mean? That when a company fails to repay deposit, it shall not, so long as the failure continues. What does it mean? That till you don't repay the deposit, you cannot give away profits as dividend. But then you tell me, which shareholders are written here? Equity shares. Can you give dividend to the preference shareholder? We can take advantage of this provision because it is a silent provision. The law only talks about equity shares, it does not speak about preference shares. Anyways, we know that preference share rate of dividend is fixed. Okay, so preference shareholder will be getting dividend. So even if the company has defaulted in the repayment of deposits, who's going to suffer? not the preference shareholders. Is it clear? Okay, section 123 subsection 1, of course all are new sections only. Proviso number 3, so very detailed we are discussing, provides that no dividend shall be declared or paid by the company from its reserves other than free reserves. If I want to ask you a question on this point, let me tell you that, you know, company had a small piece of land. It had a land and this was not required for its business. This is a past paper question. Company had a piece of land, it was not required for its business use. So company sold it because now since it's not needed, let's sell it off. Now when company sold the piece of land, there was a profit of 5 lakh rupees on the sale of land. What did company do? Company said that this is capital profit. And of course, we are also understanding this is capital profit only. The company does not deals in land on a day-to-day basis. Land does not mean stock in trade for company. It's a non-recurring transaction. So that, of course, it is a capital profit. You know what mistake accountant did? Instead of crediting this capital profit in the capital reserve, he credited it into revenue reserve. Though it was a capital profit, but accountant doesn't understand accountancy properly. That is why CA is called. So now accountant credited this profit in the revenue reserve, and since it was there in the revenue reserve, nobody knew from where this profit had come, and the company gave away dividends. Okay. Later on, company observed that it was a mistake of the accountant and it has given away revenue profits as dividend. Company is asking for refund. Give me refund. Now you think shareholder is going to give you refund for dividend once he gets? See, money if you give, never ask the money to come back. It's gone now. Okay. And secondly, when we are talking about revenue profits, you tell me one thing. Was this the correct entry passed by the accountant also? Accountant wrongly credited into the revenue profits, whereas it was a capital profit. So, you know, at times there were cases in the old Companies Act which said that if suppose company has shortage of revenue profits, it can utilize capital profits also. And with full affirmity I am making this statement because I have a reason. When we used to read the old Companies Act section 205, what it used to say, that section 205, the heading of this section was dividends. And it clearly said that whenever company gives dividend, it gives dividend out of profits, full stop. Now when section is writing out of profit, which profit, that section is not writing only. Whether it is revenue profit, whether it is capital profit, it is not clearly mentioned. It was silent provision. Just like how this point is silent here, equity share, preference share is silent. So you can take advantage of it. So you have to identify the loopholes of law and take advantage of it. So section 205 was silent on that point. Which profit, whether revenue profit or whether capital profit. So then shareholders had an argument that even if we have got the dividend, first of all, you cannot claim refund because we are not going to refund you. Okay. And secondly, one of the intelligent shareholders showed this point to the company that, sir, it is not mentioned in the Companies Act from which profit you have to give dividend. That means we can take dividends even if it is given out of capital profits. Okay. So that was an ambiguity given, the clarity was not there in the section. Now when you are reading this point, there is full clarity. Point number 2, what it says that only dividends can be given out of free reserves. So no dividends shall be declared or paid by a company from its reserves other than. Now it is clear. So now you cannot give dividend out of that profit from sale of land. Is it clear or not? That can be your exam question. Company gave dividends out of sale of land. So what is the answer? As per the new Companies Act section 123 subsection 1 proviso number 3, it is not possible for the company now because it can give dividends only out of free reserves. Is it clear? So now full clarity. Past losses need not be set off before declaring dividends since there is no express provision. See, I have found out all the mistakes of law. The people who have made law, they have forgotten all these points, and I am discussing all these points with you. That means there are mistakes in the law. What used to happen, that whenever company had some losses, it used to first take the set off and then give away profits as dividends. Okay, but now you see past losses need not be set off. It clearly says that even if you have a debit balance in the profit and loss account, you can keep it as a debit balance, don't write it off with the reserves and surplus, and then you can use those reserves and surpluses for giving dividends. It is clearly mentioned. And why I am saying that, since there is no express provision in the 2039. So you can use your profits and you can also have a debit balance in the profit and loss account. Is it clear or not? So all these small mistakes you have to identify because examiner is going to ask questions on that only. This is pure CA final. This is not IPCC. In IPCC, nobody studies so much in about dividends. Okay, that land example which I gave you just now, that is there in your IPCC practice manual also. There is no such power conferred on the central government to permit in public interest declaration of dividends without providing for depreciation. Sir, we didn't understood this point. I explained you just now. That is, depreciation provision is must before declaration of dividend. You understood? Now you understood? Okay, it means what? That whenever company gives away any profits, it has to make sure that it has to provide for depreciation. Earlier, central government used to exempt certain class of companies. Now that exemption has been withdrawn. Transfer to reserves is not compulsory. That is, a company may, before declaration of any dividend in any financial year, transfer such percentage of its profits for that financial year as it may consider appropriate to reserves of the company. Have you understood or not? It means what? That now should we follow those transfer of profit to reserve rules? No rules only. Good thing we don't have to follow. Now straight away we can transfer any percentage of profit as it may consider appropriate. Is it clear or not? Who will decide that? This board of directors have to decide. Payment of dividend through electronic mode to the registered shareholder expressly allowed. Expressly allowed means what? It is written in the Companies Act now that the company can give money to the shareholder in the electronic format. So there is no requirement for the shareholder to show the dividend warrant. Is it clear? This is one thing which I already told you. Unpaid dividend account. Remember the section number, that free reserve was section 123. This is 124 now. Unpaid dividends. Unpaid dividend account, section 124 subsection 6 of the Companies Act provides that all shares in respect of which unpaid or unclaimed dividend has been transferred to Investor Education and Protection Fund shall be allowed to be transferred by the company in the name of IEPF along with the statement containing such details as may be prescribed. Sir, what does it mean? It clearly means that whenever now company is transferring money from the unpaid dividend account to the Investor Education and Protection Fund, it should also give a list of shareholders who have not approached to the company for claiming dividends. Have you understood? That means when the shareholder will come, the authority will check his name, whether it is prescribed, whether it is given by the company or not, and then give away. Authority can give away a check to him or he can directly credit in his bank account, internet banking system. Have you understood? So now company have to give a list of shareholders who have not come to claim the dividends, because as we all know now dividends can be claimed even out of IEPF. So when you will approach central government, what it will say, how would I know whether you are the shareholder or not? Anybody will go and start claiming dividends. So there has to be some list provided from the company's point of view also. Any claimant of shares transferred above shall be entitled to claim the transfer of shares from the Investor Education and Protection Fund in accordance with such procedure or on the submission of the documents as may be prescribed. Now when I said claimant for transfer of shares, what does it mean? What you have to claim on that? You have to claim dividend. And who are you? You are the shareholder. So when the central government is going to give you that check for the payment of dividend, it is definitely going to ask some identity proof or something. Okay, though your name will be there in the list which is provided by the company, yet as may be prescribed. See this word, as may be prescribed. It means what? The government may at that point of time give you some requirements to produce photo, identity proof, etc. to show your share certificate, and then only it can give you the dividend. So this is obligatory for the shareholder and this point is obligatory for the company. Is it clear or not? Shall we copy all these points? Okay, first I have to give you the distinction between interim and final, then you can write these points. This space I had left to give you distinction. Have you written distinction before any time? Interim and final, have you written any distinction? No. Just write on one distinction. Give the heading dividend. First point. From investors' point of view, dividend is considered as a return on investment. Whereas from company's point of view, from company's point of view, dividend is a cost of capital. Dividend is a cost of capital. Full stop. Next point. Now, if you want to divide the page, you can divide and write down interim and final. Interim dividend, final dividend. Write down the dividend which is paid. The dividend which is paid between two AGMs, is regarded as an interim dividend. Is regarded as an interim dividends. That's right. The dividend which is paid, the dividend which is paid at the AGM, which is paid at the AGM, is regarded as final dividend. Is regarded as final dividend. Full stop. Next point. The dividend which is paid out of super profits is considered as interim dividend. Is considered as interim dividend. That's right. Out of normal profits, only final dividends can be paid. Out of normal profits, only final dividends can be paid. Full stop. Next point. The profit and loss account is generally unaudited. Third point. Profit and loss account is generally unaudited when an interim dividend is paid. When an interim dividend is paid. That's right. Audit is must before making payment of final dividend. Audit is must before making payment of final dividend. That's it. Now distinction is over. Next point. Now next point you have to copy from here. Let me know if copying is over. Anyone still copying? Please hurry up. Last bench. Okay, next point. Continue writing. Okay, next point. Now, as I have already told you about how many years the money should be transferred in the investor, and can the shareholder claim dividend from the fund? Yes. So those two things. Let me read first. Don't pounce on copying. Wait. Section 125 provides that claim of an investor over dividend or benefit from a security not claimed for more than 7 years would not be extinguished. What does it mean? That even after 7 years, when the money goes in the investor fund, he can still have the benefit, he can still have the right available. Earlier it used to be extinguishing. In other words, if you have not understood this point, in other words, any person claiming to be entitled for such dividends or money may apply to the authority. Authority means the government which is administering the Investor Education Protection Fund for the payment of dividend. Okay. So this point, now you can copy.